stock markets have barely crashed all around the world. This market crash is worse than the crash of 2008. History suggests that there is no quick recovery for crashes like these, which mean long-lasting effects for investors. The volatility, velocity, and magnitude of downtrend is not seen in the playbook of any past global crisis. 16 March 2020 has been the worst day in the history of stock markets since Black Monday market crash in 1987, even after Federal Reserves embarked on a massive monetary stimulus due to coronavirus. Dow Jones Industrial Average closed at 2,997 points or 12.9% lower. Dow was more than 3,000 points down in the final minutes of trading. S&P 500 dropped 12% and Nasdaq dropped 12.3% in the worst day ever. Trading halted for 15 minutes shortly after the market opened. S&P dropped 8%, which triggered the circuit breakers. It is the third time in a week circuit breakers were triggered. These circuit breakers are imposed by exchanges to maintain orderly market behaviors. Central banks are powerless to tame the turmoil by conventional cutting interest rates. It is making investors worried about governments' inability to respond in time to contain or reduce the severity of human and economic devastations. The panic response has been quickly seen in the prices of stock, distorting effective resource allocation and management of risk in the markets. The panic sell-off has been spreading to all world markets. We are dealing with global health crisis, the likes of which has not been seen for 100 years. It will keep investor sentiment fragile and prone to sudden shifts. Federal Reserve reduced the interest rate to 0% on Sunday, 15th March 2020. It was designed to stimulate the economy by making it cheaper for people to borrow. The current move of Fed is considered a big warning for banks. People fear that they will not be able to pay even the principal amount due to non-availability of jobs and business. The major averages fell to their lows on Monday, 16th March 2020, after President Donald Trump said that the worst outbreak could last until August. He also told the reporter that US may be heading into recession. Investors started fearing recession around the world and sold all their equities and commodities aggressively. It is estimated that the revenues of airline, cruise, and hotel industry will get largely hurt due to non-mobility of people, which leads to significant decrease in valuation of these companies. The major problem to other industry is the complete shutdown of economic activity. Investors have been dumping equities due to COVID-19 pandemic fears. They worry that coronavirus will cause a recession and take a bite out of corporate profits. The rapid spread of COVID-19 across the globe has dramatically heightened investors' uncertainty and rocked the global financial markets. Let's hope for the best and prepare for the worst. Kindly subscribe to our channel for constant updates. Thank you.